The producer price increases for April came in cooler than expected. Prices rose just 0.2% on a monthly basis. Joining us now is Katie Talati, head of research at Arca, to unpack what's happening. Hey, Katie.
Hey, guys. How are you?
Very good, thank you. Well, we just took a look at those charts. Not much reaction to the PPI. What are you seeing on your end?
The market's definitely been driven by a number of things the last few weeks. I would say, price reaction to macro data hasn't been as significant in the last few weeks. I think mostly, same as equities, everyone feels like a lot of the macro moves are baked in. A lot of what we have seen in the last even 24 hours, though, is much more attributable to things specific to the digital assets space. For example, yesterday, there were some wallets that moved around some Bitcoin that people incorrectly believed belonged to the US government. And the market actually ended up selling off on that. But once those kind of rumors were dispelled, the price corrected back to the current range that it's in.
So we've recently seen a huge surge in meme coins, specifically Pepe. Meme coins kind of come and go, right? Like once in a while, we'll just see this enormous explosion of some meme coin or other. And I'm just curious, what do you think that means? And what does it mean for the larger crypto market? Is it just sort of like a random thing that happens once in a while? Or is there a reason why certain meme coins surge at certain times and, how that plays into larger sort of market conditions?
I think in general, meme coins are kind of part of the, original crypto culture to an extent. If you look at kind of Wall Street Bets or any of those other kind of groups that made themselves very famous, I guess, by kind of supporting different projects or tokens that maybe didn't have as sound a thesis as some of the other kind of projects out there like Ethereum and Bitcoin, it makes sense why kind of some of these things catch on. Pepe specifically was launched 3 weeks ago. The team did a really good job of marketing the token and really building a lot of hype around it. But there's no, these tokens tend to, kind of pop up and gain a lot of notoriety when there isn't as much stuff happening in the space. Unfortunately, because they are usually the most accessible ones, a lot of, kind of newer entrants into crypto like to trade them more than they do kind of the other majors in the space like Bitcoin and ETH.
On that topic, Coinbase is getting flack this morning for a newsletter that flagged Pepe and BRC20 tokens. They were saying, don't make your long-term bets on this. Crypto Twitter is freaking out this morning. What do you make of those comments?
Obviously you shouldn't give investment advice to anybody in a newsletter, but I think that, there's been a lot of stuff going on. BRC20 tokens are completely different to, meme coins. A lot of kind of what's happening on Bitcoin right now with ordinals, which are essentially inscriptions or NFTs on individual Satoshis on Bitcoin. Those are, kind of some of the new innovations I think people are just experimenting with. Bitcoin hasn't seen a lot of kind of development or innovation in that sense. And so people are kind of pushing the limits of what can be done there, since it is the largest network, the most secure one, and the oldest one. BRC20 tokens, they're just the latest iteration of this. They don't have smart contract capabilities like Ethereum tokens do. It's just allowing users kind of the ability to build something on top of Bitcoin, which hasn't previously been the case.
Are there any other coins other than, meme coins that you're looking at that might be sort of getting overshadowed by some of this meme sensation, like tokens that you think are particularly interesting right now?
There's definitely a lot happening in DeFi, for example. I've highlighted, I think in the last few weeks, a lot of development on certain projects like Curve and Aave, both of which are, launched or launching their own stablecoin. There's projects like Makerdale that are launching their own lend borrow protocol, kind of creating more integrated DeFi services. And if we really look at where kind of the regulation is headed, we're definitely headed more in the DeFi direction. Just today, the ratio of centralized exchange volume to decentralized exchange volume, I believe, is 29%, which is an all-time high. So it's really clear that people are flocking to decentralized venues to trade and to get access to financial markets.
You brought up Makerdale. We spoke about the Spark protocol on this show earlier this week. Can you tell us about the Maker price impact on this?
It actually didn't have much of an impact, or at least a positive one just yet. I think you're not going to really see a, kind of a positive bump in Makerdale's earnings necessarily from this. The design of the Spark protocol is really to deepen the liquidity for its stablecoin DAI. DAI really has a lot of different uses in the Makerdale ecosystem. It's definitely not a simple one. It's very complicated. You can kind of lock it with Maker, earn like a savings on it, like a bank. You can now lend it through their protocol, but in many different kind of like forms. So you can use DAI, you can use the DAI that's in, locked in the savings rate. But the idea in general is to just build liquidity for DAI and allow people to borrow it at a super low rate.
Katie, thank you for joining us this morning. That was Arca Head of Research, Katie Talati.